Hello everyone. Today we are going to start with a new chapter, that is single entry system of bookkeeping. So let us see what is single entry system of bookkeeping. So first of all, before going to the chapter, so these are the chapters that you need to finish before starting this chapter. So I please recommend you that always finish off these chapters before starting this single entry system chapter, okay? Or else there might be some parts which you might not understand clearly. So please finish off this and then come to this video. So what are the chapters? Journal entry, ledgers, trial balance, final accounts is a must, because most of the questions are based on the final accounts part of the sole proprietor only. Then we have bills of exchange, might be required, might not be required. Then rectification of errors. This also. These two might be not so important, but the remaining four chapters are really important. Really important to be covered before starting this chapter. Remember this, okay? Yes. So let's start. So first of all, let us discuss what is a single entry system of bookkeeping. First of all, okay, let us take a small example. Let's say there's a street side vendor. Okay, so he's selling vegetables on the street. This is my street, and he's selling some vegetables over here. Okay, I'm really good at drawings. Okay, now a street vendor. Do you think a street vendor would know all the accounting principles, conventions, that, this, and all, and how to prepare final accounts and all? And would he know how to prepare the journal entries, subsidiary books, the ledger, trial balance, whatever it is? Will he know all those things? No, he just know how to sell the vegetables. That's it, right? But any businessman, be it a small scale business or a large scale business, they maintain some records, some kind of records they maintain. Okay. Now in this chapter, we only talk about the small scale businesses where they won't be having the accounting knowledge, so they won't be preparing the full fledged accounts which they want to prepare. Then they will only keep record of some minimal books that they require on a day to day basis. For example, let's say cash book. Let's say cash book. They won't even know that this book is called as cash book. They just maintain how much payment is received, how much payments are made by them. That's it. Whatever receipts and payments they are done for that particular period of time, maybe a month or maybe a year, only that they will record. And in cash book, what do we record? The same thing. Whatever receipts or payments that are done by us. So, right? Okay. Then except this, they maintain debtors book, debtors register, I can call it as. Why do they maintain debtors register? So that to know that they have given some vegetables, like they have sold some vegetables, but they should know that these vegetables are sold on credit basis, right? And after tomorrow I need to ask them the money, or what if he runs away tomorrow? He should be knowing how much money is pending to be received by him. And also he will have creditors register. Why? Because if he's buying vegetables from someone, from a wholesaler, then he should have a record of how much is to be paid to him tomorrow. Let's say if he's buying some vegetables on a credit basis. So in that case also he will need a creditors register. Then except this, what books might be required that he must keep? I would say sales and purchase register, or purchase book, or whatever you can call it as. So these books help him to figure out how much sales is done, how much purchases are done by him during that particular period of time. So all these records are maintained. But tell me this, to prepare a full-fledged accounts, only these many books are required. Only these many books, whatever I have listed. Using all these books, can I prepare my final accounts? No, because there are so many other books outstanding, then other ledger accounts like capital, that, this and all, right? We have seen all of them before in the final accounts. So all these registers are to be maintained separately, or all those ledger accounts are to be maintained separately to prepare a final accounts. So now, what do I mean by single entry system? See, we generally follow the accounting rules using the dual aspect concept, or which is also called as the double entry system of bookkeeping, where all the records are maintained as on the basis of double entry system. That means every debit will have a credit and every credit will have a debit entry. So because of this, my trial balance will tally at the end of the day, where my debit will be equal to my credit. This is how accounts are prepared, and based on that, my balance sheet will also tally, right? This is how you prepare the final accounts. But if you maintain only these many registers, do you think my books will tally? My books will tally? No, obviously not. See, this is of credit nature. Sorry, the debtors book is of debit nature. This is of credit nature. Then again credit nature and debit nature. But tell me this: any of this is equivalent to one another? Any of this is equal to one another? Can I say that my debtors will be equal to my creditors? Can I say that? No, because both are different registers. There is no link between debtors and creditors. And for that sake, between sales and purchases also there is no much link. So that I can say that my debit will be equals to my credit. No, I cannot say that. And we also have cash book over here which records so many accounts, like the furniture accounts or the expenses account, like the rent and all paid by me, right? So many details are maintained separately to maintain the double entry system. But using these records, I cannot ever prepare books of accounts. So that's why these books are treated as single entry system of bookkeeping, where only few records are kept by people, and that too in some cases these books are, even these books are not maintained by some people. Let us see some types of single entry system of bookkeeping. So these are some types of single entry systems. So first of all we have pure single entry. Now what does pure single entry mean? Only personal accounts are maintained. For what? For, let's say, debtors and for my creditors. Only for these purposes I am maintaining the books. That's it. Nothing else. How much is receivable to me? How much is payable from my side? Only to maintain those records I am maintaining what? The personal accounts. That's it. Again, nothing else. Even my own capital account I am not maintaining over here. This is what is called as pure entry system. Pure single entry. Pure single entry. Then we have simple single entry. Now what does simple single entry mean? Here both personal records and cash book is maintained. Here I maintain what? Debtors register, then creditors, and also my cash book. All these three records are maintained to form what? My simple single entry. All these records are maintained for a simple single entry. Then for quasi single entry, we maintain personal records, personal accounts, cash books, and also my subsidiary books. We have studied subsidiary books, right? Where we maintain sales book, purchase returns, sales returns, bills, receivable, journal proper, cash books. All those records are being maintained. So all these forms what? My quasi single entry. See, by the way, for the chapter purpose, this is not required. This is just a theoretical part where this might be asked for your 2 marks questions in the true or false part on the first compulsory question. So going ahead, see, these are only required for the purpose of computation, sorry, for answering your 2 marks questions. That's it, okay? Where nothing else. So going ahead. So let's start with our questions directly. Okay. See, in this chapter, what you need to do? Information will be given to you with regards to only few books. Let's say debtors, let's say creditors, or some expenses that have been made, cash transactions that have been made. Only these many records are given to you. Using these records, you people need to prepare trading account, P&L account, and the balance sheet. Sounds scary, right? But in simple terms, everything will be linked. Every account will be linked with each other. So if you get a track of that, on how to prepare the accounts, you can easily find out where the things are linked. Clear? It's like solving a puzzle, because few of the items won't be available to you. You need to figure out how to find those items, and once you find that, see where it can be used up. So once you know the usage also, you can figure out on which account to transfer it further, and you can, at the end of the way, you can prepare your final accounts. You can prepare your final accounts. This is how the chapter goes. Okay. So going on, we will look at how to solve the each questions. Clear? Fine. So first of all, before starting, I want to clear some basics to you people. Once the basics are clear, we will jump into the main questions. Okay. Yes. So first of all, we have ascertainment of profit for capital comparison. By capital comparison, how can I ascertain my profit? So I will give you a simple formula. See, in a business, let us say I have infused capital. Right? This will be treated as my opening capital. Treated as my opening capital. Now, yearly, what do I add to the opening capital? I add the net profits, or deduct net loss, whatever the case might be. Then less drawings, whatever I have done. So we remember that drawings will always reduce my capital contribution in the business. So drawings will be deducted from the value. Then what else? Add any capital that is infused into the business during the year. Any capital introduced into the business. So these many entries will be done, and at the end, what do I get? I get my closing value of my capital. This is how you find the value of capital. Okay. See, this is in statement form. The whatever entry I have prepared right now is in statement form. We can either prepare it in two ways. One way is by statement wise, or we can prepare capital account or the ledger account of capital. Now how to do that? We look at using the question. Okay, so just look at the question over here. Raju doesn't maintain proper records of the business. Okay, sure. However, he provides you the following information. So he has given us the opening capital, closing capital, drawings, and capital added during the year. During the year, how much ever capital is introduced by him. Then you are required to calculate the profit or loss for the year. So now we need to figure out how much is the profit or loss. So they have given us the opening capital, they have given us the drawings, they have given us capital introduced, they have also given us the capital, closing capital. Only thing missing is net profit or loss. This we need to figure out. Simple. Just substitute the values and figure out. Done. Or else what I will do is I will prepare capital account simply. I will open capital account. Capital account where debit, credit, any enter on the credit side will increase the balance, any enter on the debit side will decrease the balance. Okay, so capital has what kind of balance? Debit balance or credit balance? Trial balance. Capitals always have credit balance. So balance brought down. How much is the opening value of capital? They have given to us rupees 10,000. Rupees 10,000 is the opening value of capital. Okay, fine. Then what is given? Closing capital is given to us. So closing capital will come on this side. So to balance carried on. How much is it? Rupees 12,500. Rupees 12,500. Then going ahead. We have drawings. So drawings always reduces the value of capital. So whenever I need to reduce the value of capital, what I will do? I will debit the account. So on the debit side, two drawings. Sorry, not two drawings, two cash account. To cash, because I have withdrawn some money, right? So to cash account. My cash is going out of the business. Rupees 3,000. Rupees 3,000. Okay. Then what else is given? Capital added during the year. So whenever capital is infused into my business, the value of the capital will increase or decrease in the business. It will increase in the business. So whenever I need to increase, I will credit the account. I will credit the account. So by cash account, I have infused capital through cash. So how much is it? 3,750. Sorry, 3,750. Okay. Now let us see if my trial balance, whether my capital account tallies. I think it won't tally because we have 12,000 over here on this side and we have only 10,000 over here, 3,750. No. So we will have some closing balance. Let us see. So 10,000 plus 3,750 minus 3,000 minus 12,500. That would be 1,750 on the credit side. So by whatever it is, 1,750. So now what will this be? See, you can see that the entry has come on the credit side. So it is increasing the balance of my credit capital, right? It is increasing the value of my capital because the entry is passed on the credit side. Now, what else can increase the value of capital except my capital infusion? What else can increase my capital balance? The net profit during the year. Whatever net profit I earn during the year will increase the this will be my balancing figure or BF also you can write. Okay, so this will be my what? Balancing figure, right? So this is my net profit that is earned during the year. Let us say the balance comes on this side. The balance would have come on this side. This would be called as to net loss. To net loss transferred from my P&L account. From my P&L account I transfer it to my capital account. This we have studied in the final accounts of sole proprietor. So please refer the video and come back to this chapter. Fine. So going ahead. So this is how you need to figure out. See, basically some of the information will be given to you. Only some of the information will be given to you. And using that information, you people need to decide on how to find and what to find. So in this case, I have found out my net profits, right? So this net profit was missing. In some cases, let us see, in some cases, net profit will also be given to you. They might not give you the whatever the drawings are done or whatever capital is infused, or sometimes they might not give you the closing balance. Done. So using all these balances, find out the closing balance. Simple. That's how you need to figure out. So using your brains is really, really important. Hopefully everyone has the brains. Cool. So let's continue. Now look at the question. This one is a bit of a good question. Might come into exam, might not come, but like it's given in the material. So let's see. So illustration number 5. The income tax officer on assessing the income of Shri Modi for the financial year 2021 and 21-22 feels that Srimoti has not disclosed his full income. Okay, so now the income tax officer feels that this guy Srimoti has not declared whole of his income. So we know what does that mean? I need to find the income, the actual income of Srimoti using the records given to me. Let us see. He gives you the following particulars of assets and liabilities of Srimoti as on 1st April 22, 1st April, 1st April 2020 and 1st April 2022. So now look here carefully. So as per the question, the financial years that we need to assess is 2021 and 2021-22. These are the financial years I need to assess, right? But what dates are given to us? They have given us 1st April 20 and they have given us 1st April 22. If you see properly, in between this they have not given us 1st April 21. That means closing balance of all the assets for this year is not given to us. Right? See, when I say 1st April 2020, that means this is the opening balance of all the assets and liabilities of 2021. Whereas here what is given to me? The closing balance, because I can also write it as 31st March 2022. This would be my closing balance of this financial year. Right? So therefore, the closing balance is given over here, opening balance is given over here. Let me just write it down. So whatever is given over here is my opening balance, and whatever is given over here is my closing balance, right, of these years. Now in between this, the values are not given to us. Now let's see what to do. First of all, let's see what else is given. So on these dates, the values are given for assets and liabilities, I guess. Yes. Okay. So at the end, during the 2 years, that is my 2021 and 21-22, for these 2 years, what has happened over here? The domestic expenditure. Now what does domestic expenditure mean? What do you mean by word domestic expenditure? Domestic expenditure simply means that whatever expenses are incurred for personal use of the proprietor. So this will be what? My drawings. This will be my drawings. That is done. This will be my drawings. That is done. Okay. So 4,000 per month for 2 years. 4,000 per month for 2 years. Remember, per month is there. Okay. So don't just multiply it for one single year. Then the declared income of the two financial years are 1,05,000 and 1,23,000 respectively. So for each year, how much is the actual income declared by him is given to me. But this might not be the actual income. He might have decreased his income to pay less income tax. So we need to find out how much is the actual income by the given records. State whether the income tax officer's contention is correct. Explain by giving your workings. So now what do we need to do is we need to figure out whether the contention of the income tax officer is true or false. Right? What is the contention of income tax officer? That whatever income is declared by this guy is less than the actual income. So now let's figure out how to find out. So let's first find the net assets. I will tell you the steps how to find it out. So let's find out the net assets. What do I mean by net assets? Assets minus liability. Assets minus liability is equals to net assets. It is called as net assets. Also we get what? Capital. Whenever I deduct my total value of my assets, be it fixed assets or current assets, subtracted by the liabilities, current liability and long-term liability, both the liabilities, non-current liabilities. So if I deduct that, I will get my capital value. It is also called as what? It is also called as net assets or my capital value for that particular year. So let's start. So first of all, for 2020 and 21, net assets computation. Just a minute. Computation. So what is given to us? So till here, this for the first year. So total assets value is how much? Deducted by total liabilities. See, nowhere capital value is given to us, right? If we get the capital value, we might be able to find out the profit value. See, just like in the previous question, how we have found the the net profits over here. Similarly, in that way, we can find the net profits over here also. Let us see how to do it. So total value of assets is how much? If I have to add 25,500, so add all these values, till here, till jewelry. These are all the net assets. So the total assets value 500 plus 1,90,000 plus 75,000. That would be how much? 3,88,000. 3,88,000. Then total liabilities, that is these two values, 40 plus 35, it is 75,000. 75,000. So if I deduct this from 3,88,000, that would be minus 75,000 would be 3,13,000. What is this? This is my capital. This capital is on what date? This capital is on 1/4/20. 1/4/20. Remember this, okay? The capital value whatever we have got is from 1/4/20. Then for the next part, that is for the second year, 21/22. Again net assets. So again total assets how much? Let us see. So this till here will be my net assets, right? No, till here, sorry. See, till this part it's a net asset. This is the liability part. Fine. So if I have to add and check the value, 16,000 plus 91,500 plus 52,500 plus 1,90,000, 1,90,000 plus 1,25,000 plus 1,25,000 plus 20,000 equals to 6,20,000. This is 6,20,000, I guess. Then 55,000 is the liability value total. If I deduct and find the value, 6,20,000 minus 6,20,000, okay, minus 55,000 equals to 5,65,000. 5,65,000. So this value whatever I have got is on 1/4/22. Instead of 1/4/22, I will just write it down as 31st March 22. Both are one and the same because the closing capital will be the opening capital for the next year. So they have given us the opening values of the next year. So same will be the closing value of the previous year. So I have mentioned it as 31/3/22. Yes. Now so these two are given to us. Okay. Now what has happened? See, what I can do is, see, in between a single year. So basically this year's closing values of capital is not given. So basically this financial year's opening capital we don't know. See, basically this year's closing will be this year's opening capital, right? That is not given to us anywhere. But we need to find it out. How to find it out? Let's see. So what I can do is, see, for me the drawings value is given to me. The profits amount are given to me, right? So what I can do is, if I deduct opening minus the closing minus opening and deduct the add back the drawings, what will I get? I will get the profit for the 2 years. See, because for year to year only the profit is the addition that has happened, right? So I will treat it as a single year. For 2 years I will just merge it and treat it as single year. Now what has happened? See, if I just have to just draw a timeline for you people. This is my timeline. This is 1/4/20. Then what else is given to us? 31/3/22 is given to us. Basically 1/4/2022 will be equals to 31/3/22. So okay, but this is not given to us. That is 31/3/21 is not given to us, right? 31/3/21 is not given to us. Now how to find out? So what I will do is, since this is given and this is given, I will take this as my opening and this as my closing. Now what will happen? This whole thing will be treated as one full year for me, and I can add the profits of 2 years. And to compare this with these values, I will add the profit. I will find the profit for 2 years clubbed. I cannot bifurcate it by the way, because I don't have the enough details with me. So I will just find out the value of profits for 2 years, add them, then club these both values that is actually declared, the difference of this will be the hidden income that is not shown in the income tax. Let us see how to do it. Let us see how to do it first of all. So first of all, what I will do is here. Let us see. Let us write down the capital as on 31/3/22. Now I am coming in the reverse way. I am coming on the reverse side. Fine. Why you will come to know. So that is 5,65,000. 5,65,000. Then after this, drawings were deducted, right? So I am coming from reverse now. So from down to up I am coming. So whatever drawings were withdrawn, I will add back the drawings. I will add back the drawings now. The drawings I will add back. See, I am adding back the drawings only because I am starting with the closing capital. I am starting with the closing value of the capital, not the opening value. If I would have started from the opening value, in that case, that would mean that I have what? I would have deducted the drawings from the main figure. Now, what is the drawings value? Drawings was 4,000 per month. So that would be into 12 into 2 years. For 2 years, I need to find it out. I need to find it out for 2 years. So that would be how much? 4,000 into 12 into 2. That is 96,000. 96,000 is the drawings. Then less capital as on 31, sorry, 1420. That is how much? I found it out over here. 3,13,000. 3,13,000. So let's see how much is it. This is less. Okay. So now 5,65,000 plus 96,000 minus 3,13,000. That would give me 3,48,000. 3,48,000 is the profit earned during 2 years. That is 20 to 22. 2020, 21, 22 and 2021, 22. For 2 years, the profit whatever I have earned is this much. Now, let us see how much is the actual income declared by the person, by Srimurti. Less income declared. Less income declared. Income declared. How much is it? As per this guy, it is 1,05,000 plus 1,23,000. So for 2 years, 1,05,000 plus 1,23,000. So for these 2 years, he has declared this much of income. So 1,105 plus 1,23,000. That would be how much? Only 2,28,000 is being declared by him. Only 2,28,000 is declared by him. So what is the actual profit? What was the actual profit over here? 3,48,000 was the actual profit, but he has declared only a profit of rupees 2,28,000. So that means the difference amount would be what? The hidden income that he has not declared in the income tax. So 1,20,000 is the profit, that is income that is not declared. Income that is not declared by Srimurti. So the income tax officer's contention was true, that full income is not declared by him. So he has evaded a tax on income of rupees 1,20,000 rupees. Okay, this is how you find out. So this is how you need to use your brains. Clear? See, only tricky part here might be for you people currently it might be this part. Okay, remember this, whatever the balance on 1/4/2020 is given to me, that I have treated as a opening capital, and on 31/3/2022 what is given to me is treated as a closing capital. Using that logic, I have found out the profit for 2 years, not for single year, but for 2 years. Similarly, I have used the drawings also for 2 years. So everywhere I have used 2-year term as a single year term. I have shown you in the table just now that for these 2 years, for these two separate years, I have shown it has to be a single year. I have assumed it to be a single year and found out the profits for 2 years combined. That is 3,48,000 rupees. And then what did I do? To compare it with like value, I have totaled what? 2 years profits. 2 years profit declared by him is how much? 2,28,000. That I have compared with what? The 2 year profit that I have got before. So using that I have found out the not reported or unreported income. Clear? This is how you solve the question. Then going ahead. Okay. So these are some techniques for obtaining the complete accounting information. So there are some general techniques where you see, this is not really important. First of all, I will just brief it to you. So first of all, we have general techniques. In general techniques, what happens is we will just use the information whatever is given to us. So let us say in a cash book the information is given as to the additions done. So using that logic we will find out whether the amounts added by the proprietor is towards the capital or any of the income that is received from the business. So depending on that you will add to capital or to the P&L account. Okay. Then we have derivation of info from the cash book. So from cash book we can get many informations like what is the value of sales, what is the value of purchase that has been done, what is the value paid to the for the purpose of expenses, what is the closing value of cash book, whatever information depending on the demand of the question we will find out what is required to us. Clear? That's it. Everything will be dealt in the questions itself. Okay, everything I will teach you properly in the questions, because if I just explain the theory it's of no use. So using the logics over there I will teach you what is it. Okay. Then analysis of sales and purchase ledger. So see, you using sales and purchase ledger you can find out your value of cash sales or credit sales, albeit for the purpose of finding the debtors or creditors value. You can use this. How to use this I will teach you. Let's see the question. But before going that, let's discuss the how to find what. Okay, just like we had found net profit in the first question. In the first question, we had found net profit by figuring out a capital account, right? Similarly, now we will prepare debtors account and find out the bad debt. See, look at the question now. Illustration 6. Calculate the value of bad debt from the following information. So, opening balance of debtors is given, closing balance is given to me already. Okay, so now what to find then? Amount received in cash is given, discount allowed, credit sales, bills receivable, and bad debt. So, bills receivable is important because bills receivable is taught to you in the bills of exchange chapter. So please refer that chapter and then come to this chapter. Then we have bad debts. Now we need to find what? We need to find bad debts. Now how to do it? Let's see. So now because the debtors balance are given and we know that bad debt comes up in which account? Only in debtors account. So we will prepare debtors account now. So now to prepare debtors account. Debtors account, debit and credit. Debit and credit. Okay, let me zoom it out a bit. Yes. So now on the debit side, if I pass any entry, it will increase the balance of the debtors, and if I pass any entry to the credit side, it will decrease the balance because it is a debtor. It's an asset account, right? It's the asset account, and for assets, every increase will be debited, every decrease will be credited. Remember this. So now let us pass the entries. Opening balance of debtors will come on the debit side because debtors account will always have a debit balance. So to balance carried down rupees 5 lakhs. I will just write 5 lakhs. 5 lakhs. Then closing balance is given to us. So buy balance carried down. Buy balance carried down. See, if you have only studied your ledger part, you can understand this chapter, or else it is difficult to understand. Remember this. Then amount received in cash. So whatever amounts are received from debtors, where will it go? It will decrease the value of debtors. So buy cash rupees 6 lakh. 6 lakh. Then discount allowed. See, whenever I allow a discount to my debtors, the value of debtors will decrease, right? So again, credit the entry. By discount allowed. Discount allowed is rupees 10,000. 10,000. Next, bills receivable. So what will happen when the bills receivable is issued? Again, the balance of debtors will reduce, right? Whenever bills receivable is issued to a debtor, that means the balance of the debtors value will decrease. So this we have understood in bills of exchange chapter. Why will that happen? Clear? I won't be explaining it once again. Bills receivable account, rupees 3 lakh. Yes. Now let us see what to find. Bad debts. Tell me where will bad debts come up? Bad debts will reduce the value of debtors, that we know. So whenever value of debtors reduces, we will credit the interest. So bad debts might come up over here. Let's see. Let's try to balance it and see whether the balance comes over there or not. So I think we have missed this part, right? We have missed this. So to credit sales. So first of all, tell me whenever I do a sales to someone, the balance of debtors will increase because he has not paid me, and this is a credit sales. It is a credit sales. So therefore, the value is said to be received from the person. So to sales account, that is rupees 11 lakh 40,000. Now let us find the value of bad debts. So 5 lakh plus 11 lakh 40,000 minus 6 lakh minus 10,000 minus 3 lakh minus 7 lakh. So this is how much? 30,000 rupees. So 30,000 rupees I have got on the credit side as a difference figure or the balancing figure. Now what is this called as? In this case it is my bad debts. It's my bad debts. This is my balancing figure. This is how you find out the value of the difference figure. Clear? Okay. See, I will not clearly say that from debtors account you will only get the value of bad debts. Depending on the question, what you might need, the question might hint you over there. The question will clearly not specify that using the debtors account, please find out this value. You need to figure out from debtors account what can I get. Depending on that, you will solve your questions. Let's see. Before that, one more small exercise question you have. That is, a firm sold 20% of the goods on cash basis. Okay, whatever goods it sells, it's 20% on cash basis. The balance is on the credit basis. Okay, fine. So basically just remember a formula. Whatever total sales we have will generally be divided into two categories. One is my cash sales, where I will be receiving cash as soon as I make sales, plus my credit sales. See, businesses generally do credit sales also, right? So therefore, whatever sales value I have, in that we have cash sales and credit sales. Both are included in the sales value. So just look at the question whenever it's given. Okay, does it mention sales or does it mention cash sales? Remember that, because this terminology becomes really important. Because see, cash sales goes to my cash book. Whereas credit sales goes to my debtors account. Right, to my debtors account. Cash sales won't ever come in my debtors account. Only the credit sales will come into my debtors account. So therefore, always look at the terminologies whatever is given to you. If only sales is given, assume it to be total sales. Clear? Until unless anything else is specified. Sometimes in the question what they give is, they will give you the value of sales, and in the next line they will mention that all the sales are done on cash basis. So in that case, you should assume that the credit sales whatever is given to you is zero. It is zero. There is no credit sales being done by the business, so it will be zero. So no entry will be passed in the debtors account. Simple. Okay. So going ahead. So on the credit basis, okay, fine. So debtors are allowed 1.5 or 1.5 months credit, and their balance as on 31/3/2021 is how much? 1,25,000 is the balance. It's in the closing balance of debtors. Assume that the sale is uniform throughout the year. Why is this hint given to you? I will tell you why. Calculate credit sales and total sales of the company for the year ended 31st March 2022. Now what has happened over here? What is given to us over here? Only the sales value, no, only the pending debtors balance is given to us, and they are given how much is the credit given to them. So how will I find the value of sales? See, look over here. Total sales multiplied by number of months of credit. Okay, the value, the proportion divided by 12 will give me what? Will give me the value of debtors. Will give me the value of debtors for that month. The value of debtors for that month. If I divide it by 12, it will give me the debtors value for 1 month. If I don't divide it by 12, it will give me the value of debtors for the whole year. For the whole year, it will give me the value. Clear? Now in this case, only the closing balance is given to me. So now what to do with this? Let us see. So first of all, What is given to us? Let us see. So value of debtors is given to me. Number of months of credit is given to me. So now what do I need to find? I need to find total sales value that is being done to the debtors. Or instead of total sales, I can say that it is a credit sale. Why credit sales? Because for whenever debtors comes up, it is always a credit sale and never a cash sale, right? Whenever cash sales are done to someone, we don't open debtors account. We directly open cash account and finish it off over that itself. Cash and sales account. Cash account debited to sales account. If you remember the journal entry. Now what to do? So because this is given to us, what you can do is 1,25,000. That is the closing balance multiplied by 1.5. Sorry, multiplied by 12 divided by 1.5 will give us what? The total. This will give us what? The total uh, credit sales value. 1,25,000 into 12 divided by 1.5. That would be rupees 10 lakhs. That would be rupees 10 lakhs. So 10 lakh is the sales that is being done. That is being done. That which sales? This is my credit sales. So I have simply used above formula and substituted the values over here. Nothing else. Nothing big thing I have done. So 12 will be multiplied by this and it will go down. This is how you find out your credit sales. Clear? Yes. Now the credit sales is mentioned over here. But what do I need to find? I need to find credit sales that is done and total sales. But now to find out the total sales, I need what? So I know that total sales is equals to what? Cash sales plus credit sales. So now I have the value of credit sales, but do I have the value of cash sales? No, I don't have it. But one hint is given to us. What? The firm sold 20% of the goods on cash basis. So out of total goods sold, cash basis how much? 20%. So the remaining will be 80% will be the credit sales. So I know that this credit sales whatever is given to us is 80%. Is 80% of the value. So now find out the 100%. Find out the 100% of the value. How will you do that? Cross multiplication. Simple. So multiply this with here and this with here. You will get your total sales. So total sales will be equals to credit sales of rupees 10 lakh multiplied by 100 divided by 80 is equals to how much? Divided by 80% also I can do simply. I will get 12 lakh 50,000. So 12 lakh 50,000 is my total sales that has been occurred. Okay, this is how you need to figure out on using what to what. See, simple, what do you say? The algebra we had used, right? X, Y and all. So simple terms, you are like figuring out what is missing and how to find out that. That's it, okay? That's it should be done in this chapter. Only if you are thorough with your final accounts and your basic journal entries. Only then you can solve the questions easily. Fine. Continuing. Now look at the next question. It is illustration number 8. Adam G keeps his books on a single entry basis. Okay, fine. The analysis of cash book for the year ended 31st March 2022 is given below. So they have given us the receipts and payments. So basically, this is a full-fledged what? Cash book which is given to us. This is a full-fledged cash book what is given to us. So balance at the bank, cash in hand, and opening bank balance is given. There is no opening cash balance given to us. Fine. Okay, no issues. Then going ahead. Particulars of other assets and liabilities are as follows. So sundry debtors are given. So April 1st 2022, 31st March 2022. Fine. So opening balances and closing balances given to us. So sundry debtors is given, creditors is given, machinery, furniture, inventory, investment. Okay. See, nowhere the value of capital is given to us. Keep this in mind. To prepare balance sheet, we need the value of opening capital or the closing capital. So any one of should be given to us, but both of them are not given to us here. Okay, then going ahead. Prepare final accounts for the year ending 31st March 2022 after providing depreciation at the rate of 10% on machinery, furniture and 800 against doubtful debts. Okay, so these many details are given to us. So using these details, what should we do? We should find out the we should prepare the final account. Now, what final accounts include? We have trading account, then P&L account, and we have at the end of the day balance sheet. So these many things we need to prepare. But for preparing these many things, we need some details. Without those details, we cannot go ahead. Let us see. Now let us see what is required first of all. See, for preparing a trading account, if I have to see, for trading account to prepare, if you know final accounts, you will know this. For trading account we need what? First of all, opening stock. Then we need value of purchases. Then we need any direct expenses that is required for, so in this case it is not required, so leave it. So we have sales on the other hand, and on the fourth side we have what? My closing stock. And on the fifth side we have gross profit or loss. So something should be given to us, right? Something should be given to us. So let us see out of these five items what is given to us. So go back to the question again. What is given to me? Only if you see the value of inventory is given, that is 3900, 3700 opening and closing. Both are given to me, inventory part. Then sales, if you can see, cash sales is given to me. But remember, I have told you that total sales will not only include cash sales, but it will also include what? Credit sales, right? So, will credit sales come in my cash book? Will credit sales come in my cash book? Never, because there is no cash transaction. So, credit sales won't come in my cash book. So, only cash sales is given to me. I need to find out what? Credit sales. So, credit sales I need to find out. Also, let's do one thing. I will just write it down somewhere. I will just write it down somewhere over here. So I need what? Credit sales now. Because I need total sales for the trading account. So I need credit sales. Then we need purchases, right? But I think, only see. Cash purchase value is given to me. Only cash purchase. But purchase, similar to sales, purchase will not be only through cash. Some credit purchases will be also be done. So we also need credit purchases. Credit purchases also required. Then what else is required? So opening inventory is done, closing inventory is done. Then we have credit sales, we have credit purchases. So using that we can find the total value of purchase, total value of sales. Then closing stock is already given to us, so we can directly find out what? The gross profit. Using that gross profit, we will prepare P&L account. In P&L account, what else we need? See, this is the expenses that is given to me. Right? Drawings is not expense, leave it. And over here, interest on investment is an income that is given to me. Receipt from sundry debtors is not an income, so skip it. And then what else is given? So over here depreciation is there and provision against doubtful debts is given. So two are the expenses. So using those expenses I will figure out my P&L account, and from P&L account I will find my prepare my balance sheet. But one small issue is there over here. That is, capital is not given to me. If you see, capital is nowhere given to me, right? How can I find out the capital? How can I find the capital? If you see, the value of other assets and liabilities is given to me, including my opening cash or bank balance is given to me, right? This will also be a part of my assets. So now using this, what I can do, I can use the formula assets minus liability equals to my capital, be it opening capital or be it closing capital. So using this formula, I will figure out my capital. Now, first of all, what we will prepare? We will prepare something called as statement of affairs. Affairs, sir. So what does affairs mean? Statement of affairs. Affairs. So on this side we have liabilities. On this side we have assets. Okay. This is amount column. Okay. So using statement of affairs, we will find out the opening balance of the capital. So this is prepared on what date? On 1/4/20, 21. So on 1st April 2021, I am finding my opening capital balance using the statement of affairs. So now let's see what to do. See, statement of affairs is similar to the balance sheet, but only thing is, balance sheet will always tally because we will have all the figures already given to us. But in statement of affairs, what happens? Statement of affairs is only prepared so that you will find out your difference figures or what are the balancing figure is. But in our case, it is, see, assets are given to us, liabilities given to us. Only thing what is not given to us is my capital value. So that capital value will be found by using the statement of affairs. See, at the end of the day, statement of affairs is exactly similar to the balance sheet. Remember this, fine? So now let's put all the value of debtors, the assets. So we have debtors, then we have creditors over here, then we have machinery, furniture, and we have inventory, we have investment, and we have balance of bank also, right? Because see, if you see, the bank balance is given to us over here clearly. This is the opening balance of cash or the bank which is given to us. This will also be a asset to us. Then what else is given? Yes, I think we are done. Okay. So let us figure out the values. So let us opening balance. So only take care of the opening balance for nothing else. Nothing else, because I am preparing statement of affairs, not my closing balance. So 14,500. Then machinery value 7,500. Furniture 1,200. Inventory 3,900. Investment 5,000 rupees. Bank balance is given over here, that is 2,800. Then creditors value is again given over here to me, that is 5,800. 800. Okay, now find out the difference figure over here. 14,500 plus 7,500 plus 12,200, 3,900 plus 5,000 plus 2,800. That would be how much total would be? 34,900 minus 5,800. So 29,100 will be what? My value of capital. This is my balancing figure. This is my balancing figure. 29,100 will be my balancing figure. So both the sides should tally. Both the sides of this statement of affairs should tally, because this will be exactly equal to my balance sheet. So in balance sheet also, my liability side and my asset side will both will be equal. So this is how we prepare your statement of affairs. Then going ahead. So what is the next thing that we need? We have got our capital balance. We have got our capital balance now. Okay. See, I need before going further, I will just tell you how to frame your answers. Okay. See, this in these kind of chapters, what you need to do is, see the main answer. What is asked to prepare? What they have asked: prepare final accounts. Right. This is the main question. So what you will do is in your examination is, see, final accounts will take what? Final accounts will take trading account. Then your P&L account and your balance sheet. These are the answer that they expect. This is the main answer that they expect. This is my main body of the answer. Main answer. Against that, we need to prepare some working notes. We need to prepare some working notes. Just like how I prepared my balance sheet or my statement of affairs is a part of my working note. So I will give it number 1, that is my statement of affairs. So similarly, there are some other account that you need to prepare continuously. Okay, this will form the second part of the answer. So while writing the answers in examination, see, you cannot prepare your main answer without preparing the working notes, because using the working note you will find some missing values. Using that values you will put it in the main answer. So without that you cannot write your main answer. So what I do in my examination, what I have done in my examination is basically leave 2 pages. Simply leave 2 pages for your trading account, P&L and balance sheet. Okay, just leave it blank, no issues, because the paper is given free of cost to you. Whatever exam fees you have paid, out of that only they give you the exam answer sheets. So you need not pay extra money, right? So simply leave 1 or 2 pages. If you are not confident, leave 3 pages, no issues. Just leave 3 pages for the example. You see, after practicing going on and on, you will understand how much space is required depending on the question. You will have an estimate of how much page is required. So generally, 2 pages are required. 2 pages are required to prepare the main answer. So after that, straight away write working notes. Straight away write down the working notes. Then write down one after another the working notes. So after this, what will happen is, because of this, your answer will have a structure. Using this structure, what you can do, you can create a good impression on the person who is checking the answers, because he will think that, okay, this guy knows how to frame his answer clearly. That means he has practiced so much that he's really has become good at it. He has really become good at it. So because of this, there will be a little bit of an impression created on your answers, and we know that because of some small impressions, there might be some answers, like the marks will be given more sometimes, not every time, because there will be other students who have also practiced the same way, right? So you should stand out from those students. So because of this, please practice to prepare working notes and main answer separately. So the main answer, whatever is expected from you, should be on the top, and then the working note should be prepared. Okay, leave space, no issues. If the extra page remains, just put a scratch and move on. That's it. Just put a scratch on the page using a pencil and just move on. Don't use the pen. Don't use the pen to scratch it, because after some time, if you want to come back and like make some corrections over there, whatever pen mark you have put, you cannot erase that. So always use a pencil to make it a scratch over there. Okay, no issues. Skip a page. Nothing will go to waste. Okay, because I think a booklet of 20 pages will be given to you. 20 to 30 pages will be given to you for examination. Use it. If it is empty, get one more sheet. Clear? For accounts, please follow this method. For every chapter, this method should be followed. I think from your inventory chapter, this needs to be followed, because from inventory chapter onwards, all your working notes will start. So keep this in mind. Clear? Yes. Going ahead. Now, since we have got our capital value over here, we have got our capital value. Now, next thing what is to be found? See, as per the trading account, let's go to trading account. We have opening stock, we have closing stock, gross profit we will find using the trading account. The thing is, we need purchases and sales, right? Only cash items of both things are given. Cash sales and cash purchase is given to us, but we don't have the value of credit sales and credit purchases. How can we find this out? Using what? Debtors and creditors account. Clear? So for debtors and creditors, they have given us the opening balance and the closing balance for both of them. So we will find out the credit sales and credit purchases over here. Let's see how to find it out. So let's prepare debtors account first. So anything on the debit side will increase the value, anything on the credit side will decrease the value. Debtors account, because it's a asset account. So now opening balance of debtors is given to us, that is 14,500. So 14,500 will come on the debit side. Again I won't repeat why. So to balance brought down is rupees 14,500. Then closing balance of debtors is given to me. So buy balance carried down is how much? 17,600. Okay, what else is given regarding the debtors? See, will cash sales come in debtors account? No, because while cash sale we receive cash, so there is no point of creating debtors account. So then, received from Sunday debtors. Okay, I have received some money. I received some cash from debtors, right? 48,000, and we know that whenever I receive cash from debtors, my debtors value will reduce. So on the how much is the value? Rupees 48,000. 48,000 is the value. So on the credit side, buy cash or bank 48,000. Okay, fine. Now going ahead, what else is given to us? Cash sales is given, nothing required, nothing required. Okay, only these many items are given to us. So now I can balance the account. So balance the account now. See where the balance comes up. 14,500 minus 48,000 minus 17,600. So 51,100 is given to me. Now what is this 15,100? 51,100. It has come on the debit side. So what entry can it might be? What is that which increases the value of debtors? What is that which increases the value of debtors? So in simple terms, my credit sales or my sales account, I can write it as, yes. So the value of sales is something which increases the value of debtors. This is how you need to figure out what the entry might be. This is how we need to figure out what the entry might be. If let us say credit sales is given to us, let us say this was already given to us, but there comes a balance on the credit side. It can be the cash received from debtors, and this can be used to prepare what? My cash book or cash account for that sake. Clear? In some questions this might also happen, but in this case we need to find out credit purchases. Sorry, credit sales. Now, next what do we need? We need creditors account, right? So first of all, write down the value of total sales. Let us see. Value of total sales. Total sales equals to credit plus cash. How much is the credit sales? As per the answer I have got, 51,100. Sorry, 51,100. This I have got from my working note number 2. This is my working note number 2, right? Debtors account is working number 2, and this is my working note number 1. This is my working note number 1. So from working note number 2, I got my debtors value. So just you can mention that this is from working note number 2. Fine. Plus what is the cash sales that has happened as per the question given to us? Cash sales is rupees 11,000 is given to me, right? So as per this question, 11,000 is the cash sales. So what is the value of total sales then? 51,100. 51,100 plus 11,000, that is 62,100. 62,100 is my value of total sales. Okay, then going ahead. Creditors account. Creditors account I need to prepare to find out what? To find out the value of credit purchases. Okay. So again my values are given to me. My sundry creditors value is given to me. That is my opening balance is 5,800. So go back to your accounts. Opening balance will come on what side? On the credit side. Why? Because creditors have credit balance. So buy balance brought down is how much? 5,800. And what is the closing balance? To balance carried down is how much? 7,900. 7,900 is the closing balances. Then what else is given regarding creditors? Here nothing is given. In this part nothing is given. Then going ahead, in this part what is given? Payment to sundry creditors. The amount that I have paid to sundry creditors. So whenever I pay amount to sundry creditors, what will happen? The value of sundry creditors will reduce because I have to pay less tomorrow. So now, so where will the entry come up then? Because I have to reduce it, so entry will be on this side. So to cash or bank account, how much is the value? 35,000 rupees. So 35,000 rupees. 35,000 rupees is the value. Okay. Now find out the closing balance or the balancing figure. So that would be how much? 35,000 plus 7,900 minus 5,800. So on this side the value is by something 37,100. So that means 37,100. So that means there's an entry that needs to be passed on the credit side. So tell me, in creditors account, what will increase the balance of creditors? What will increase the balance of creditors? That tomorrow I have to pay more. Whenever I make more credit purchases, the value of creditors will increase. So because of this, the entry will be bought by credit purchases. Credit purchases. This is my balancing figure. This is my balancing figure. Yes. Okay. Now find the total value of purchases. So total purchases equals to again cash plus credit. So what's my credits purchases? That is 37,100. That is my working note number 3. Working note number 3 plus the cash purchases. See here cash purchase is given to me in cash book, that is rupees 12,000. Okay, so rupees 12,000 is the cash purchases. So what is my total purchases then? Plus 12,000 equals to 49,100 is my total purchases. So I have got my cash sales. Sorry, I have got the total purchases, total sales. Opening stock is given, closing stock is given to me. Everything is found out then. Okay, now we need to prepare what? Trading account. Now what I will do is I will prepare trading account. So trading account. Tell me how to start with trading account. So first of all we have buy opening stock. Sorry, to opening stock. What is the value of opening stock? Opening stock value is given over here. Inventory is given, right? So 3,900 is the opening stock. 900 is the opening stock. Buy closing stock. How much? Closing stock. Inventory. Closing stock. 5,700. 700. So over here again, two purchases. Purchases will include both my credit and cash, right? Credit plus cash. How much is it? Purchases value that I have found out. That is rupees 49,100. 49,100 rupees. 100. And on this side we have buy sales account. So sales account, we will write what? Cash plus credit sales, that is 62 100. 62 100 is my cash, sorry, my total sales. My total sales 62 100. 200 is my total sales. Okay, now what do we need to find? What will we find? We have opening, we have closing, we have purchase, we have sales. We will get our gross profit. So gross profit carried on to what? To P&L account. So what is the closing value? 3900 plus 49 100 minus 62 100 minus 5700, that would be 14,800 is my gross profit. That is in negatives, right? So that's why it's on the debit side. So 14,800 is my this thing. So now let's prepare P&L account, profit and loss account, where on the debit side we have all the expenses, on the credit side we have all the incomes. So by gross profit brought down, how much is it? 14,800, right? Okay, just a minute. Okay, 14,800. Then on the income side, what we have? First of all, let's finish off income side. So incomes on the receipt side, we have what? Cash sales we are taken care of. Capital brought in is not an income. Interest on investment. Interest on investment is given to us, right? Interest on investment is what? Will be an income to us. So 200 rupees income we have earned by the interest. So by interest, 200 rupees is the interest that we have earned. Okay, then going ahead. Expenses, what is given to us? So they are given payment of salary, general expenses, rates and taxes, right? So what I will do is I will just club all this, okay? For the sake of understanding, I will just club it all. 6,500 plus 2,500 plus 1,500. So I just clubbed all these three. All these three I have clubbed. That would be 10,500. So 10,500 expenses as per the cash account. So to expenses, that is clubbed 10,500. So except this, what are other expenses that we have incurred? If you see the question, if you remember the question, we had what? We had depreciation and we had doubtful debts over here, right? A provision for doubtful debts is to be created and a provision for depreciation is to be created. And remember this, provision for doubtful debt won't come in my debtors account. Only bad debts come in my debtors account. Provision for doubtful debts won't come because it's a provision created, and provisions is not charged to my debtors account. It's charged to my P&L account, and from P&L account we charge it to my balance sheet. And in balance sheet we show it as a subtraction from the debtors value. This is how we do it. This has been dealt in the final accounts of sole proprietor chapter. Remember this. So now depreciation. Okay, depreciation of 10% on what? Machinery and furniture. So what is the depreciation over here? Depreciation should be found on the closing values. In depreciation, in chapter we have dealt it, right? Depreciation is always found out on the closing value of the assets. So machinery 7,500 is given to us. So into 10%, how much will that be? 750. And we have furniture on the 10% will be how much? 120. So total depreciation will be how much? 750 plus 120. That is 870. 870. So 870 rupees is the total value of depreciation. So again go back to my P&L account. To depreciation 750. Okay, compute it. Please compute the value somewhere because it should be visible. It should be clearly visible. If you are making a working note for it, please mention that it is taken from the working note. Clearly mention that it is taken from the working note. So 750. Just a minute. Sorry, 870. Sorry. 870 is the total value of depreciation. 750 plus 120. 750 plus 120 is the value of depreciation. Clear? Okay. So if you see, the depreciation is not charged, right? Because see, the opening balance is equals to my closing balance for both the cases. So that means the depreciation is not yet charged on the value of the assets. If there was a difference, that means we would have either purchased the machinery or sold the machinery. So remember this, okay? Whenever there is an addition or deduction in the value and depreciation is separately given to you, that means there is some addition or deduction that has been done from the value of machinery or the assets. Okay, fine. Okay, after depreciation we have what? 2. Provision for doubtful debts, right? As per the question, provision for doubtful debts is given to us. See over here, 800 rupees is the provision for doubtful debt. So 800 rupees will be provision for doubtful debts. So now compute the value of net profit. Minus 10,500 minus 870 minus 800. So that would be 2,832 net profit. This is my balancing figure. This will be carried forward where? To the capital account. Remember this, okay? Fine. So now we need to prepare balance sheet. Yes, we need to prepare a balance sheet. So to prepare a balance sheet, we'll just extend this. Okay. Now let's prepare balance sheet. My liabilities will be listed over here. And assets over here. Now write down all the value of assets and liabilities clearly. It is the closing values. Always see, opening values are taken care of in the statement of affairs. So closing values should be taken care of in this part. So in this, let's take care of that. So we have debtors, then we have machinery, less depreciation. Please mention it separately. Please mention it separately. I am just making it a net basis over here. Furniture, then we have inventory, investment. Okay, debtors, I think we have some differentiation, right? So what I will do is I will just take it down. From debtors we need to deduct what? From debtors we need to deduct what? Yes, PDD, right? So debtors value is how much? Closing value of debtors 17,600. 17,600 minus what? 800. So 17,600 minus 800 is the PDD. So how much will that be? 16,800. Then machinery. So 7,500 is the value of machinery minus 750 is the depreciation. So 6,750 is the value of machinery, the net value. And coming to my furniture, 1,200 minus 10%. That would be 1080 is the value of after depreciation. The value of furniture after depreciation. So inventory, closing inventory is how much? 5,700. 5,700 is the value of closing inventory. 5,700. Investment value is 500. On this side we have sundry creditors. The value of sundry creditors is 7,900. The closing value, right? See, here we have mentioned 7,900. Then capital. Now look at this very carefully. So what is the value of opening capital? What is the value of opening capital? Somewhere we had found, right? Where? In the statement of affairs. See, in statement of affairs we had found out the value of opening capital. So that is how much? 29,100. So come back, 29,100. So just mention working note number 1. How much? 29,100. 29,100. And what else is given to us? Let us see. Let us see the cash account first of all. So this is done. See, a capital introduced is given to us. Okay, this is already done. So this is required. So I just mark it over here. So this is required. Then what else? Payment to sundry creditors is taken care of in this, the creditors account. Salary, general expenses, rent and taxes are taken care in the P&L account. Drawings is given to us, right? So drawings is required for computation of the new capital or the closing capital. Then cash purchase is taken care of. Then balance at the bank and client. Okay, this one we have missed it out. Remember, right? In the balance sheet, in the closing balance sheet, see, these are the closing dates. On the closing dates, we need what? Closing balance of cash and bank. So both you can club it and take it. So that would be how much? 6,900. Cash at bank and cash at bank and cash in hand. Cash plus bank 6,900. 6,900. Just a minute. 6,900 is the total value. I have clubbed both of them. Okay. Then we have what? Capital that is introduced. Introduced. How much is the value of capital that is introduced? As per the question, that is 6,000, and drawings is 3,600. Okay, remember this. So 6,000 is the capital introduced, less drawings 3,600. See, all these things are dealt in final accounts. Remember this. Okay, I won't be going deep into it. Why to add, why to deduct it all. Then we have what? Okay. Other than this, we have net profit that is to be added over here from the P&L account. So from P&L account, what is the profit? P&L account. This is my profit. Right? Net profit 2830. So go back to the account 2830. Okay. Now find the value of closing balance. This is less than that. 29,100 plus 6,000 minus 3,600 plus 2830 equals to 34,330. Okay, I think we have not missed anything else. So just total it. See, just total it. Okay, let's see. If we miss, the balance sheet won't tally. If we are not missed, the balance sheet will tally. Just mention as on 31/3/2022, I guess. Right? Let's check that. As per this, 31st March 2022 is what we need to prepare for. Okay, now just add the asset side first of all. So for asset side, 16,800 plus 6,750 plus 1,080 plus 5,700 plus 5,000 plus 6,900. That would be how much? Okay. Would be how much? 42,230. Then on this side, 34,330 plus 7,900 is how much? 42,230. So my balance sheet is tallying. So this is how you prepare your accounts for single entry. So only with the help of cash book and some opening balances and closing balances, I prepared my complete set of accounts under double entry system. See, the first step always is to prepare the accounts under double entry system and to switch it from single entry to double entry. Simple as that. So try to take it to double entry as much as possible with the information, whatever the piece of information given to you. Okay. So yeah. So we'll continue with the next example. So if any doubts in this part, if you don't understand how to prepare it, see the answer is a bit trickier over here. See first, see let's revise. Let's do one thing. Let's revise. So first of all, find out the requirements. First step is to find the requirements. Find requirements as to what is required. Requirements. So we saw that we need the capital balance of the opening capital, then we need credit purchases, we need credit sales. So depending on that, prepare accounts. Prepare the working notes that is required. Prepare working notes that is required. Depending on the requirements, prepare the working note that is required. After that, prepare the main answer. After that, prepare or write down the main answer. Prepare main answer. What do I mean by main answer? What is expected from you? What is expected from you in the question? Clear? These are the basic 3 steps you need to follow. So everything will link. Everything will be interlinked. So remember this. Clear? Yes. So we'll move on to the next question.